With recent news headlines surrounding U.S. banking, which seem to have temporarily spooked the financial and banking sector of the market, there's been more scrutiny arising among investors. We have a familiar bias towards such news stories because it hits close to many a recent memory of the 2008 financial and banking crisis that sent our globe sprawling to recover for several years. But is this risk present today? What about the highly attractive savings rates that we are now experiencing? These questions make sense coming from our clients, since many have repositioned some of their portfolios to cash or other alternative investments amidst the turbulent 2022 stock market year. With many parking lazy money at attractive 4 or 5% yields not seen in over 30 years, it warrants a question: how safe are my deposits? In the case of bank deposits, including high-yield savings accounts, they are FDIC insured, meaning the Federal Deposit Insurance Corporation, a federal independent agency, has a depositor's account insured at the bank to $250,000. Now, this means that for many of my clients, there is an independent agency that guarantees their money will be there should they need it. But why would the money be at risk to begin with? Why would these banks pay premiums to the FDIC to insure their deposits? I thought banks were supposed to be safe from risk of loss. Now, it's true that the banking institutions in the U.S. are some of the safest places to keep your liquid funds. And now, with very attractive savings rates, they're getting even more attention than in years past. So how can a bank fail or my money be at risk from not being returned to me? Well, banks have a unique way of operating. That is, they take their deposits, which are the bank's liabilities, since these have to be paid back to the depositor, and then they do what's called fractional reserve banking. And just like the description says, they can lend out your money to others while only needing to keep a fraction in reserve. Now, this can create a problem when they've loaned out or bought other assets with this money, and a large percentage of their depositors all want their money back at the same time. We call this a run on the bank. Everyone who is a depositor is running to the bank to take their money out, for fear that it won't be there should they be the last one in line. If you've ever watched the classic Christmas movie, It's a Wonderful Life, you'll remember this happened to Bailey Building a Loan, when all the townsfolk were concerned that they weren't going to get their money back, and George had to pay out all those people. So if deposits are insured, then why do some banks still fail, especially from something like a run on the bank? Well, in the case of recent bank failures, they were largely due to a couple factors that happened all at once. Number one, the bank had over 90% of its depositors who were well above the FDIC insurance mark of $250,000, so no protection on the majority of their deposits, since these were large multi-million-dollar deposits. In addition, the bank had placed many of these deposits into instruments that deteriorated in value with the constant rate hikes from the Fed, mainly bonds and mortgage-backed securities. Now, since they took a loss on these assets, that they had to satisfy the request for funds to depositors who had been hit hard by the economy slowdown, was a double-edged sword that spiraled quickly. Since this incident, the FDIC, the U.S. Treasury, and the Fed had said they would be bailing out everyone affected. So not to worry about the cap of $250,000 in this case. But this creates a potential issue down the road, however, if this gives banks a perceived license to now possibly be even riskier with their management, if all deposits will be bailed out no matter what. But that's for another day. Now, in conclusion, the fear of losing your money at a local bank is grossly unwarranted, and one could argue have much greater risk in keeping large amounts of cash at your home, where theft or property destruction could claim it, to which there is no insurance for. Rather, a sound financial plan needs a strong base of liquidity, and in this economic landscape, a high-yield savings account can be an attractive tool to help support this purpose. I hope you found these concepts I've shared with you today valuable, and perhaps gave you a few things to discuss with your family as you continue to plan your journey down your own financial path. If you found this video useful, please hit the button below before you go and share with someone you care about. Until next time, keep doing life better.